talk about China, soda ash, chemical trends, and demand in Europe. Mr. R. Mukundan, Managing Director and CEO of Tata Chemicals, joins us now. Let's understand from him. Mr. Mukundan, always a pleasure to have you on ET Now. Thank you for joining us. First things first, how is the demand dynamics of the soda ash market moving in the light of what is happening to China and in the light of what is happening to Europe?
Good morning, Nico. It's always a pleasure to be back with you. And I just want to say that we are extremely watchful. Because of what you just heard in terms of the market issues. But really, even as we are watchful, we are just seeing that the demand is holding up. The real demand is holding up. As far as the markets are concerned, they are fairly balanced. And last year, for example, for the first time, China became a net importer. So the China reopening hasn't really fully played out, but I think it's beginning to play out. But we are then having to be watchful of the kind of rebalancing of supply chains, which is going to happen, which is going to benefit India. And we're also seeing another trend, which is that the US has emerged as a low-cost production center for many of the energy-intensive businesses like chemical sector. So again, so we find ourselves in a bit of a sweet spot being present in India, present in US. These are two biggest manufacturing sites, and the market is on an uptrend as far as we are concerned. We're also helped by some level of, I would say, the changes which are happening in the external environment, mainly driven by, I would say, the sustainability trend. So one big part of the demand actually has been the chemicals needed to make the solar PV glass, which is of which soda ash is a big component, and also to produce lithium carbonate, you need soda ash. So I think those two sustainability trends have been growing at about 6-7%, even as the other sectors of the market have been growing between 2 and 3%. So that's broadly the global market demand trend. And what we were concerned last year through this calendar year which finished was the European situation, given the unfortunate conflict there. And I must say that we have been extremely positively surprised by the way our UK operations have held up. In fact, because of the very, let's say, good risk management from our side in terms of putting in hedges and making sure energy was hedged, I think their margins did expand and they become profitable for the first time after about 7-8 years. And the trend is likely to continue. Kenya also benefited because of this uptick in the market. So our Kenyan operations today are debt-free. And we have delivered to the extent of approximately $150 million in this rising interest environment, which effectively has meant that while our debt has come down, we have almost similar interest costs. So overall, the margins and profits have certainly increased.
Okay. Sure, that's great. But tell me, Mr. Mukundan, is it reflecting in your volumes right now, the dynamics which are currently playing out, the China reopening and the global recession?
Yeah, I think we're fully booked out. So it is reflecting in the volumes. And I think next year, for example, what we are planning is additional 200,000 tons capacity coming on stream, which I think is fully booked out again. So every year we'll have additional capacities being brought on stream. We do have plans to expand at least by about 1 million ton over a period of time, and that program is on track and is going to get absorbed quickly in the market. To give a broad indicator, this is about a 50 to 60 million ton market, and growing at about 3 to 4%. The world needs about 1.5 to 2 million tons of material every year additional. I think if growth tends to continue the way it is. We've even tracked what was the worst fall in 2008, sector by sector. What was it during COVID? And what we can really see is this market at best will be tight to balanced. I think that's our prognosis going forward.
If I look at the commentary which has come from your peers, and in this case, your nearest peer I can see is GHCL, they are making a case that the soda ash cycle is in a multi-year uptrend. It will not get affected because of what's happening to the global energy trends, and if at all the Indian demand is going to remain robust. Do you see that kind of an optimism? I was looking at your conference notes also for last 2 quarters. There is no iota of concern there. So can I say the soda ash cycle in India at least is at it's a multi-year trend?
It's not an Indian trend, Nikunj. I think this is a product which travels around the world. So really, I think if you see our capacity, we are today maybe second or third. I think depends on how you count our capacity in the world, and our largest capacity is in US. I think one of the key components is that US has turned to be the most competitive place to produce soda ash, and that is and in these sort of products, it's very important to be cost competitive. India also is very cost competitive, and China is not adding too much of capacity. About 4 to 5 million ton is going to come, but it's going to come in Inner Mongolia, and that's very way off from the coastline, and they're going to have a cost of transporting it and getting it to the port, and hence it's going to most probably serve the domestic market. So overall, I think the kind of softness we saw in the market because about 4 to 5 million tons of capacity came in Turkey, that has been fully absorbed in the market. There is not such a large capacity coming on stream in a very short span of time. So this is all going to be, 1 million ton added here, 500,000 ton added there. So and that kind of capacity increase is needed in the world, mainly because I think if you want the markets to move in a very balanced way, which is what all of us want as responsible supply chain partners to our customers, I think really we want this to grow in a very balanced way. So these capacities are needed, and they're coming in a much more calibrated manner as we go forward, because that kind of a big spike which happened, I think 4 or 5 years ago, that has been more or less absorbed.
But Mr. Mukundan, tell me what's happening with input prices and the realization trends when it comes to the India market?
So the pricing is more or less going to be flat. You would find sometimes it's going up by, $10 here or $10 down. I mean, I don't see that as a big reflective. The input costs are more or less stabilized. I can only say that. I think around the world, there is a stability in input costs. The supply chain bottlenecks have eased, so material can move freely. The port movements are much easier. The freight rates have come down. In fact, the fall in the net realization has actually been not much, but the gross realizations did fall because I think the freight rates did come down, the shipping rates did come down. So they've also stabilized now. So we are seeing softness in input costs, and demand continues to hold up. Last year, for example, just to give an anecdotal piece of the market, which we're very concerned about, the European business. Europe, in fact, shipped the highest amount of container glass ever in its history in a year where we were actually fearing the worst. So that sort of tells you that sometimes we read the headlines, but you got to go behind the headline and meet your customers, customer segments, and stay close to them. And I think what we can see from our customer segment and our customers is that the demand is still holding up, and they are also equally watchful, because this is a difficult period to navigate through. But we are very confident that the short term is holding up, and in the medium and long term, I think this business is in a sweet spot.
Thanks so much for joining in, and I wanted to understand if now plans are being revisited when it comes to some sort of an EV plant or looking at EV batteries. Is there something that's being looked at in this vein?
So we are going to be, as a group, the Tata Group is certainly looking at it. As far as Tata Chemicals is concerned, we are focused on being a supply chain partner to that entity, and already we are present in the value chain through being a vendor to lithium carbonate manufacturers in South America, who are one of our big customers, and we would continue to engage in looking at supplying whatever chemicals that entity needs. So I think that work is progressing in the lab, and we also eagerly await that these plants in India come up and we can be a supplier of choice to them.
The battery manufacturing business for Tata Chemicals. Are you at a breakthrough moment where what looks like an incubated idea could actually be a significant contributor in 5 years, 7 years?
Yeah, I think if you look at the areas which we are focused on, one is the silica business which we incubated. I think the tire industry is also going through a transformation in terms of going towards green labeling and green tires. And I think the dispersible silica, which is one of the products which we launched, is fully the pilot line of 5,000 ton is fully booked. In fact, we are short of capacity there. We are thinking of pivoting part of the food line which we had in silica food to the tire grade, and we have as we mentioned, going through a process of investment to expand capacity 10 times to 50,000 ton in a phased manner. So we are looking at pockets of what I would call the chemicals which feed into the sustainability and green trends across various sectors, and we'd continue to sort of engage in that.
But Mr. Mukundan, I've had the pleasure of tracking Tata Chemicals for years, and I'm aware of the small businesses which you're trying to incubate, the kind of experiments which you're trying to do and where you're investing. Somehow Tata Chemical has not really managed to add large revenue lines despite their focus. So 5 years from now, will Tata Chemicals still be known as India's biggest manufacturer of soda ash, or it would be a very different company? Because a lot of Tata companies have gone through a new avatar.
Yeah, so I think Nikunj, for us, the main business which we are in is actually a large chunk of our business. So I really think if you look at the revenue growth, I think we've moved from about 12,000 crores after divesting the food business into as it demerging it into Tata Consumer. Our revenues did fall, but I think we are back to where we were pre-demerger at about tracking close to, let's say, 17 odd thousand crore. We should be crossing 20,000 crore next year. So I think we've been growing at a good clip, but a large chunk of it as a proportion continues to be our main business, which is sodium chemicals, which is soda ash, bicarbonate, salt, etc. So I think they are profitable businesses, giving EBITDA of 40% plus. So and if demand environment is good, it is only natural that you would continue to expand, because we don't want to lose our leadership position thereby. So we are focused on maintaining our leadership. At the same time, I think the new areas will get seeded, so that space would grow. But given the market dynamic today, it's a kind of a good spot for us to also continue to invest in businesses which are which we know well. The issue is not about the product itself, it's about the applications of the product. I think one of the key things which has happened to this chemical is that I think it has found more sustainable applications which are more driven by sustainability trend. I think if you dig deeper into the sectors into which it sort of supplies, I think that has undergone a shift and change, and that's the positive side. So I don't know whether you look at it as a strength or weakness, but I think when your core product is growing well, I think it is better to also focus on that and not to lose leadership there. I think leadership is pretty critical, and having a multi-locational, multi-geography supply chain capability is very important. And I think we will continue to keep that as our strength. But at the same time, we would continue to invest. For example, we do believe silica is a new area for us across the silica chain, and the area of rubber and tire materials. And as something fresh keeps coming up, we will keep pushing our investment in that direction.
Appreciate your time. Thank you so much for giving us a clearer idea of Tata Chemicals' plans down the line and what the outlook is for the business. So as of now, they're saying that the demand drivers are lithium ion and solar glass. China reopening has begun to play out, and their capacity is fully booked out. Time to take a very short break. Be right back as we continue to focus on the markets.